Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good afternoon, everybody. Welcome to NinjaTrader Platforms Unleashed. My name is Jim Cagnina with NinjaTrader. It is Monday, November 27th. Appreciate everybody being here with me today. We have a very special topic. Before we get into that topic, I do want to introduce Ed Jerkin. Ed is behind the scenes in the chat, and he will be answering any type of question whatsoever related to NinjaTrader, anything in the chat. So if you have any questions, pop in there. The easiest way to do it is just to go to ninjatrader.com/the word events, EVENTS, ninjatrader.com/events. Say hi to Ed, say hi to me. Appreciate everybody being here. We're back to the PC-based trading platform. Remember, there's three ways to trade: the PC-based trading platform, the award-winning trading platform. We have also a web-based trading platform that you could log in on any web browser, whether it's a PC, an Apple product, or whatever. And then there's the mobile app also is the third way, and all of this stuff is integrated with your account. But today we're going to go back to the PC-based trading platform, and we're going to talk about overlay charts and comparison charts. So we can take a look at a couple of different markets at a time and see how they're correlated. And we're going to go ahead and build a couple of those in today's presentation. So again, thank you for being here, and let's go ahead and get right into it. We're going to start with this is my regular layout, right? I have a chart. I have the control center at the top. I have a market analyzer, quote board on the right. So what I'm going to do is I'm going to create a brand new chart, and I'm going to compare two markets. And let's just pick two. Let's pick a stock index future, say the E-mini S&P, and compare to the gold futures market. So I'm going to go up to the top of my control center. I'm going to click on the word new, and a drop-down menu is going to appear, and I'm going to click on the word chart. And it's going to open up a dialog box. And it's like, all right, now what do I do? Okay, so I'm going to start building a chart from here. And the first thing I'm going to do is I'm going to select an instrument, right? Now, I could select it from the dropdown, or I could type in the symbol. I know what the symbol is. It's E-mini S&P is ES. So I'll type in ES, and the smart search box comes up with options. I'm going to scroll down until I see E-mini S&P futures. Here it is, and I'm going to double click on that, and it's going to apply it. It says apply, E-mini S&P. Now, I'm not going to stop here. I'm going to add another market because I want to compare two. So I'm going to go ahead and I'm going to add gold. I'm going to go back up here, and I'm going to type in GC because I know that's the symbol, and smart search will give me an option. Futures, gold futures, double click there, and it's going to also add it to the applied. So now what this is doing, it's creating a chart with two different instruments associated with that. A chart. Now we have to figure out how we want it outlined out. So I'm going to go back to I'm going to select the E-mini. I'm going to go ahead and highlight the ES. And on the properties side on the right, I'm going to make some changes. And this is, again, total flexibility on how you want this to look. But for presentation purposes, I think the bar chart style to be a line on close might be a little bit better way to take a peek. I'm going to go ahead and change that. I'm going to keep everything else the same. I'm going to keep it's a daily chart. I'm going to load 365 days worth of data and all of that stuff. And so I'm just going to change that line to line on close. That's the chart style. Now I want to change the color here too, because gray is not that attractive. So we'll go ahead and change it to navy blue. We'll click on navy blue, and that's all I'm going to do at this point. This is all I'm going to do at this point. Now, I'm going to go to the left side, and I'm going to click on the word GC. I'm going to click on gold, and I'm going to highlight that market right there. And it's going to give me the properties area for this particular set of data. And again, I'm going to do the same thing. I'm going to go to line on close. I'm going to chart style, drop down menu, line on close, and I'm going to select that. And we'll make the color appropriate, right? We'll make it, dark orange. That's kind of like gold. And we'll go ahead and select that. Now, I'm not going to change bar width or anything of that nature. And we're going to keep everything else the same, except panel. Well, we'll keep panel. We're gonna keep panel the same. So it says new panel, right? It says new panel under panel for the gold data. We're gonna leave it like that. It'll create a new panel below the E-mini S&P panel. I'll go ahead and highlight that just so you can see what it is. It's panel 1. So panel 1 is going to be for the E-mini S&P, and then gold is going to be a new panel, which is going to be panel number 2. So I'm going to hit OK, and it should open up the chart, and it does. Okay, so we have E-mini S&P line on close at the top with this y-axis here associated with pricing that's E-mini S&P related, and then on the bottom panel we have a gold chart down here. This is again, and the axis here is consistent with pricing for gold, right? And so now we have two on one window, if you will. Now I have ChartTrader open. You can close ChartTrader if you want. And not only that, I could do technical analysis on either one of these panels, right? I just have to select the panel and then right click, and I could add indicators, I could add drawing tools, all of the regular stuff that we talked about and many different shows about NinjaTrader platform Unleashed. And so you can see here, the bottom axis here is all in sync, right? This is all time. This is time series analysis. This is a daily chart on the top and a daily chart on the bottom. Very simple, not too complicated. And you can see, you can kind of look at it and kind of see there's kind of a rough correlation somehow, some way with respect to this these two markets, right? And so we could take this to another level, right? We could take this to another level, and we could actually calculate what that correlation is. And I'm going to go up to the top, this E-mini S&P top here. I'm going to right click, and I'm going to go ahead and select indicators. Now, I could also select indicators from the upper menu bar, but I'm just kind of used to right clicking, and I'm going to click on indicators, and it's going to open up a window with all of my indicators. And I'm going to scroll down to, and you guessed it, correlation. Where's correlation? Here it is. Correlation is right here. I'm going to double click. That's going to go ahead and send this correlation study down to the configured section. It's highlighted gray. And then I could change some of the parameters, right? I could change some of the parameters here. The first thing I'm going to look at is how much data do I want to, how many days do I want to use to calculate the correlation? And right, the default is at 10, and I'm going to change this to 20. So we'll change it to 20. That's about a month's worth of data, so to speak. Now, the data input series is the very first market we added to our chart, which was the E-mini S&P, ES, December 2023. Now, I have to add what I want to compare, right? And what I want to see the correlation between. And so E-mini S&P is one. So under instrument, I'm going to go ahead and type in this ticker symbol for gold. So it's GC, and I'm going to hit that space button, and I'm going to type in December, DES, DEC, sorry, and then 23 for that's the front month right there. So the second thing I'm going to do is I'm going to change this to calculate on price change. And there's really nothing else we need to change here other than I'm going to change the color again. We'll make it a little bit different just to kind of show it off a little bit better. We'll make it green. And I could change the style, the line style, the dashes and histogram bars and all that stuff. But we're just going to keep it a solid line for now. That's 1. So I'll hit the apply button, and I'll hit OK. So now it's the third panel. I have a third panel right now. So panel 1, E-mini S&P chart. Panel 2, gold chart. And then panel 3, a correlation between the E-mini S&P and the gold on a 20 period calculation. And, so you could kind of see where it's heading right now. Now, one thing I would do right? And we'll talk about what correlation means in a second. But one thing I would do is I'm going to go ahead and adjust the lines between each panels, and you could color code this any way you want. I have it red. I'm going to add a horizontal line manually at the 0 mark. Oopsie, I missed it by one tick. There we go. At the 0 line. So anything above 0, we say is positively correlated. Anything below 0, we say is negatively correlated. And 0 is, I guess, uncorrelated. It's kind of neutral, right? Now, you can't go over 1, right? 1 is perfectly correlated. And then you can't go below -1. -1 is perfectly negatively correlated, right? And what does that mean? Well, if something goes up, you're going to have an equal effect on the other market is going to go down, right? And so right now you could kind of see that the correlation between E-mini S&P and gold it's gone from a negative state to a positive state to a negative state. Now it's going back to a positive state. So when you're thinking about looking at different markets for your trading decisions, and you're watching a market move in one that maybe is a little bit more aggressive than you thought, you could look at that correlation, where the correlation is, what the paradigm of that correlation is today, and then you could go ahead and make decisions, help bolster your decisions in the other market. That's kind of one way to look at it. So this is kind of a simple way to lay this out, right? We have E-mini S&P, gold, correlation at the bottom, and the longer the correlation, so we'd set it at 20, right? You could set it at 30, 40, however long you want, depending on what you're looking for. But monthly correlation seems to be pretty good idea for me anyway. So that's kind of the basic type of layout right here, right now. So let's go ahead and let's add a comparison chart though, and let's do it so that we don't have a panel 1 and a panel 2. Okay, so I'm going to go ahead and minimize this, and we'll go to that new button again, and we'll create a new chart. Let's just create a new one, and let's just say we want to compare the stock index E-mini S&P stock index future to the micro Nasdaq, the Nasdaq stock index future, and we'll go ahead and add that one. And I'm going to go through the same process pretty much. E-mini S&P. Again, we're going to do line on close. I'll go ahead and change it to line on close. You could do any of them. But it gets a little messy sometimes when you're doing candles. So line on close is good. And then color, again, we'll change that just to kind of make it easier to see. We'll call that navy. And let's go ahead and then move over to, so by the way, panel 1, scale justification. I want to bring your attention to scale justification. It's on the right. We're going to keep that on the right. So micro Nasdaq, same modifications. We're going to go ahead and change the candlestick to a line on close, and we'll change the color to, we'll change it to green. That sounds like a good color. And then I'm going to scroll down again, and under new panel though, I'm going to select new panel and say, no, I don't want a new panel. I want it all on one chart. I don't want a second panel. So I'm going to select 1. Now, because I selected 1, I have to make a slight adjustment here. I want my scale to be on the left-hand side, because if you put it on the right-hand side, you'll have 2 different scales at 2 different price levels, and it'll be really messy. So let's go ahead and click on that left. So now that scale justification is on the left, for the second instrument, I'm going to add to the E-mini S&P chart, and I'm going to hit OK. And it's going to create the chart again. And now I have this overlay chart. This is a true overlay chart, to be honest with you. On the right-hand side, you have the E-mini S&P pricing. And you can see that's the blue line, right? And then the green line is the Nasdaq. And you can see on the left-hand side here, you can see Nasdaq pricing. And this is probably the cleanest way to do an overlay chart if you wanted to do it on one panel. Now, again, we could do the same thing again, right? We could right-click and go to indicators. And let's do the correlation again. I'll scroll down to the word correlation, in my indicators window, available indicators window, and I'll double click. That's going to bring that down to the configured section. It's already highlighted gray. I'm going to change my parameters to 20. In other words, 20 days. This is what I want the calculation based on. And then the instrument, I'm going to change to the one we're looking at. That's MNQ space DEC 23, right? MNQ space DEC 23. And we'll calculate this on price change. Maximum buyers lookup 256. That seems reasonable. You could change that to a longer time frame if you want. All of this regular stuff, I'm going to change. I'm going to keep the visuals the same. We're going to have the panel in a new panel though, because if I put it on this panel, then it will change some of the axes and it'll look messy. So we're going to keep it in a new panel at the bottom. It'll create a panel number 2 at the bottom of this chart. And we'll keep price markers on, scale justification right, correlation colors. Yeah, let's make it a little bit easier to see. I don't know. We'll make it crimson. That seems like a good color. And then I'll hit apply and OK. So now maybe crimson wasn't the best possible color of all time because my line separating panel 1 and panel 2 is red. But needless to say, there you have it. Now, again, I'm going to put that horizontal line in just so I know I have a reference to where 0 is, right? If you want to reference at a different number, you could. And this isn't surprising. It's not surprising that these 2 stock index futures are highly correlated, right? Approaching 1 even right now. Now, there's times in the marketplace when it's not, right? When it's less than 99.8% or 90% or some high number. You know, let's just take a point in time here. Let's take this is the 17th of October, right? The 17th of October, we were at about a 77% correlation or 0.77. You could say it either way. You could say percent or you could say positive correlation, by the way. And then, things kind of reverted. So what would a spread trader do? A spread trader might look for an opportunity for these two markets to revert back to that close to 1 or 100% correlation level, right? And maybe do a spread trade, maybe buy one and sell the other or something like that. So that gives us a kind of a really nice, nothing surprising here other than sometimes these correlations is less than perfect, right? If you go all the way back to March of 2023 and your correlations are barely over 0, they're around 25%. Right. So then now you could take a look at the marketplaces and say, OK, was the S&P doing better? Was the NASDAQ doing better? Why were they doing better? What was this about interest rates? Is this about a couple of tech stacks? And then you could kind of put that in your arsenal for later use so that when you see these discrepancies, what to look for and to kind of help you figure out what the possible direction is of the marketplace. So this is a pretty handy tool. Overlay. Now, the overlay on the same chart, on the same panel, works a little bit better when it's positively correlated. When it's not positively correlated, you could see the lines would go in wildly divergent directions. Not to say that you can't plot this, right? You could certainly plot E-mini S&P versus crude oil at the same level for sure, but the lines will look a little different. So keep that in mind as well. So let's go ahead and then let's ask ourselves another question. Take a look at my market analyzer and look at. I have several different months of the crude oil futures contracts on my screen. Right, I have the January 2024 contract, February, March, September, and then December. I have several of the front months out there, and maybe I want to ask myself, well, what is this market in contango or backwardation? What's the relationship between the current month's pricing of the currency futures markets and the outlying months? So let's go ahead and make that comparison chart. I'm going to go ahead and click on New again, and we'll create a chart. All right, so what I'm simply going to do is exactly what I was doing before. I'm going to type in crude oil, but in this case, I'm going to type in the months, right? I'm going to type in January 24, and then I'm going to add another one. I'm going to add February. Oopsie. February 24. And then I'm going to click up here. I'm going to add March 24. And then so on and so forth, right? I'm going to go ahead. Let's get September in there, and I'm skipping a bunch of months, right? Because this is a monthly contract, but these are the big months, so I think it'll give us a good idea what's going on here in the crude oil market. And then lastly, we'll just add December 2024. Okay, so now I have 1, 2, 3, 4, 5 different markets that I want to compare on one chart. I'm not going to do separate. You could do separate panels, but let's do it on one panel first, just to see how. Well, actually, I take that back. Let's go ahead and do this on their own independent panels. And then we'll go ahead and add it to the same panel. We'll modify it, right? So starting with January again, it's going to be line on close. It has to be line on close. Otherwise, you have all your bars interfering with each other. And we don't want that to happen. Now, it's important also to color code these kind of, in my mind. And so the front month to me, we could either make it dark to light or light to dark. So let's go ahead, dark to light. Let's start with navy. Right. And then, so that's it, really. That's all we want to change. Bar width 1, color navy, line and close. This is all looking pretty good. And this is panel 1. Now, the second one, February 28th. Again, I'm going to switch this to February 24. I'm sorry. Again, we'll switch it to line on close. And then we'll make it a little bit lighter color. I don't know. Let's call it, well, these are great names. Let's go cornflower blue. We'll go to cornflower blue, and it's going to put it in a new panel. All right, let's see what panel it puts it on. It should be fun. All right, let's go to the third one. The third one is March, right? Again, we're going to change this to line on close, and then we'll drop down the color to, let's call this one green, right? Remember, we're going dark to light on the colors to help us visualize this new panel again. Let's go finally to September. Not finally, I shouldn't say finally because there's a December, but let's go ahead and hit line on close. And then again, we'll drop this down to red. And then lastly, December 24, line on close. And we'll change this particular one to orange. All right, so again, they're all new panels. Let's hit OK and see what happens. And voila. We have a rainbow, kind of. So January 24 at the top, with the current price of $75.48. February 24th, next one, with the price of $75.67. March 24, $75.76. September 24, $74.40. And then December 24, $73.41. And they're all in their different panels. Remember, it was the first one was panel 1. And then all of the other markets we added were, new panel. Now the software is smart enough to realize, hey, all right, we're going to put this one at panel 2. This will become panel 3. This will become panel 4. And then lastly, this will become panel 5. And so far, so good. Looks great. Now, one thing I talked about contango versus backwardation. And what I'm looking at are these prices, right? So this is a marketplace that's finally coming out of backwardation. What does that mean? Backwardation is where the current month is at a higher price than a further out month, right? And so if you just compare January 24, the price is $75.41, and you go down to December 24, where it's less, it's $73.37. That relationship between those 2 months contracts in crude oil is in backwardation. If that's not normal, contango is normal. It's where the months further out are at higher prices, and you're starting to see that right between January and February. And this is kind of with the last couple of weeks, this is kind of slowly switching this way. And then it's even a higher price when you get to March. Now, when you get to September, and I know I skipped a bunch of months, but when you get to September, then it starts going down. The prices right now, currently, mark to market, $74.41. It's less, and then it's even less in December. So this, if you think of this as like a yield curve type of situation, This is starting to flatten out and becoming more normal, back to contango. So that's how I know that. Something similar for the yield curve. Okay, there's another good example of how this yield curve, all these contracts started at the same time, so it's they're parallel. They're on a parallel track here on the chart. You don't see it. You don't see that weird start time where it starts to diverge from a center point. And let's go ahead and take a peek at the properties here. Data series. We have the 10-year note, which is the top one, and bar width is a little thicker, yeah. And going down panel 1, everything is good. Scale justification right. 2-year note, panel 1, scale justification right. 30-year, this is the yield by the 10-year, 2-year, 3-year yield, still on panel 1, all good. Now the E-mini S&P is a comparison at the bottom, and you can see it's in panel 2, right? It's in panel 2, and looks right. Hit apply and OK. And this was kind of what I was trying to show with the crude oil contango chart. We're able to do it on individual panels, but not on the same panel. And I'll try to figure out a workaround for that to happen. All right, so that's kind of the basics here. Next time when you pop it back in here, I'll have an answer for why the crude oil behavior was a little bit different for the front months on that. I don't know the answer to that. But also feel free to type into the chat to ask any questions you might have about NinjaTrader. And then also you could send an email to me at learn, Learn, at ninjatrader.com. Learn, Learn, at ninjatrader.com. Appreciate everybody's time today. Comparison charts and correlation charts are, pretty interesting things to do. You could compare all the different asset classes, whether you're looking at gold, the dollar index, the Euro FX, treasuries, whatever instrument you're interested in comparing and seeing two charts side by side. That's a kind of a quick and easy way to do it. Hope that helps. In the meantime, folks, be good to each other and be safe out there and be good to each other. Thanks for coming.